The US Treasury is the largest credit line the IMF has.
You're basically saying all three parties did something good, contrary to what others believe.
All of them have done good things, all of them have done terrible things. No one has done excellent things. Okay? This is it's like going to university and saying, we'll give you a scholarship, but you better make sure that you get full marks or
you get a 4.0 GPA, you wake up at 6 a.m., you go to class, you go to bed at 10 p.m., you eat only broccoli.
This is exactly what it is. The IMF can also be used as university.
Hello and welcome everyone to DigiTales. I have the privilege and honor of having a dear friend of mine who has spent 15 plus years in treasury and capital markets. He understands the world of finance extremely well. He's also the chairperson of YPay, an automated mutual fund. He has also spent 4 years on CNBC, back when CNBC was around, as a primetime anchor. So he's going to talk about the world of finance and what's going on around us today. How are you, Niran Rehman?
Thanks for having me, Faizan. Always
Cheers,
a pleasure
man.
to hear. Hello to all your viewers as well.
Thank you for joining us. I wanted to talk to you about understanding how we can get out of the situation we're in, because a lot of people that we sit with today, literally every strata of society is only talking about ye kya ho raha hai mulk mein.
Okay.
रोटी इतने की हो गई है, पेट्रोल इतने का हो गया है, where does this go, IMF की डील हुई है, नहीं हुई है. There has been a series of events that have led to this, and we want to better understand what happens from here on out. So can you summarize how we ended up here?
Yeah, it's
simplest terms?
You've asked a lot of things as normal anchors do. They'll throw 10 questions all copped into one.
And as a good guest, you will summarize them very well.
Right. But I'm going to try. Okay, this is a highly complex. It's a
for the layman. For
there are multiple questions and it's highly complex. Now I'm going to try to explain how we got here. Okay. And I'm going to do it from my personal experience.
Right.
As me, as a Pakistani.
Right.
Who is majority, जिसने पाकिस्तान में ही major जो career उसका है, वो पाकिस्तान में ही रहा है. I spent a little bit of time abroad, but the majority of my career is based in Pakistan. And there's a reason for that. Now, I consider myself, when I talk to my peers, my colleagues, people who are younger to me, people at IBA, who are entering the job market, I've always divided the world, at least for us, for our age bracket, in one basic incident.
And our age bracket, let's say, is
40.
Okay.
Is 9/11. All right. There was a world before 9/11.
So literally half our life ago.
Literally half our life ago. There was a world before, and there was a Pakistan before 9/11. There was a Pakistan after 9/11. And what we're witnessing right now, and this is a personal analysis, what we're witnessing right now is a very much a Pakistan which is after all the repercussions of 9/11. The boost, the bump cycles is what we're witnessing right now.
Okay. And explain that to me.
I will explain that to you. So the first, unless we're going directly into the IMF, because that was also part of your question. In 2001, I'm going to start with 2001, because this is now the post 9/11 world, when I was about to enter the job market.
Right.
And every people my age were just graduating out of college and thinking about what they want to do in their lives. Do they want to stay in the West? Do they want to move back to Pakistan? Do they want to be entrepreneurs? Do they want to start a job? And this was so in 2001, when President Pervez Musharraf was the leader of Pakistan, he signed an SBA agreement with the IMF right after the 9/11 incident.
An SPA agreement.
A service level agreement.
Okay.
With the IMF, which means a brand new fresh program.
Okay. So you're going to get new money as a country.
Fresh money.
After 9/11.
After 9/11.
So there is some sort of political geopolitical reasoning at the time.
There's geopolitical so then, because you've asked the question, we need to understand the structure of the IMF. The major funders of the IMF is the G7, but the major funder of the IMF is the US Treasury.
So within the IMF, the G7 contributes, which is basically the 7 large countries, which are America, China, France.
That's correct.
England.
Yes.
Who am I missing? Germany. And I'm missing 2 more.
Japan. Yes.
And I'm missing
We've missed one more, which we can get to if
But within that, it's not an even allocation.
It's not an even allocation. It is definitely not. The US Treasury is the most powerful credit line to the IMF.
So let's say if all 7 of these guys contribute money to the IMF and say, hey, give it to the world.
They don't contribute money. It's a credit line.
So the IMF,
the IMF has a credit line to the US Treasury.
So hold on. Let's clear this again. So these 7 countries are not giving money to the IMF so that the IMF can give it to the world as it seems fit. They are giving credit to the IMF.
That's correct, yes.
But they are not giving credit evenly. So, for example, if the IMF has $100, it is not divided evenly by 7.
It is not. The US Treasury is the largest credit line the IMF has.
Okay, so basically, America then has a predominant say in the IMF because the bulk of the money from the IMF comes from America.
That is correct. We have seen incidences. Now, I've started with the President Musharraf's program, but we've seen incidences where finance ministers and the leaders of this country have directly negotiated with the US Treasury on the IMF structures.
So they've bypassed the IMF.
Every time it's gotten difficult with the IMF, we have seen leaders at higher levels directly negotiate with the US Treasury in recent times.
And why is that relevant?
I'll get into it. Now, we can imagine, I'll let the audience and yourself imagine the relaxed IMF programs we faced post 9/11 due to the fact of Pakistan's strategic role with Afghanistan and, more importantly, the NATO supply lines which had to be facilitated with Pakistan via Afghanistan.
So basically, when you say relaxed programs, don't pay late,
this is
no problem.
You need money. Here's the money.
So it's like having daddy's credit card.
It's like having daddy's credit card. Exactly, if you want to be brutally honest about it. And then in 2004, this facility was extended. And at that time, we really didn't need the IMF program because there was a lot of foreign direct investment coming in.
So you didn't need the IMF in 2004?
We extended the facility.
But let me come back for a second to the post 9/11.
Yeah.
Post 9/11, you're also coming out of 98, where you had the nuclear test.
Yes.
And that was the last time that your reserves had reached sort of alarmingly low levels.
Correct. That's correct.
So from 98 to 2001, you couldn't have recovered.
From 98 to 2001, we were asking the IMF for a loan, but we could not get it.
Until 9/11 happened.
Until 9/11
And so now, for 3 years, you struggled. So
You're
9/11 for you, for Pakistan, was actually a blessing because you got money.
I wouldn't use the word blessing. I would use the word, what is blessing is our geo position, is our
Pakistan's
geography.
placement was a blessing.
What's blessing is the placement, not the leadership. We just happened to be under military rule at that time.
Right.
What's blessing is the geopolitical importance we had for the United States and our reaction to 9/11 at that time, which allowed us to have that critical credit line opened at that specific time.
So had we reacted differently to that event, we may not have gotten
may not have gotten into the IMF program.
Got it.
Let's fast forward to 2000.
And that was the first time in our history we got into the IMF program?
No. We have been. I've actually got a list over here. We have been with the IMF, my friend. We have been with the IMF since 1958. We've had over 70 programs with the IMF.
So 1958, we've had over 70 programs. And in 98, after the nuclear tests.
The reason why I don't want to go so back is I'm using 9/11 as the pivotal.
Right.
The pivotal.
But
event.
the reason I brought up the nuclear test is it is important to point out that that is the last time we were at such alarmingly low levels.
I understand that.
And we were not getting the kind of funding we needed.
I understand that. There were also sanctions on us.
There were also significant sanctions.
There were significant sanctions on us. And forget a credit line from the IMF. We were not getting that support facilitation from G7 and other countries, which were required for us to boost up our reserves.
And in fact, dollar accounts for individuals were frozen as well.
They were frozen. I don't like the word freeze because technically you could get PKR from, I don't want to get into the technicals of the banking system, but it's not theoretically a freeze.
Got it.
What's important to realize is that whether you call it timing, whether you call it a blessing, whatever you want to call it, 9/11 was the pivotal role which got us back into the IMF program.
Got it.
On highly, excessively relaxed measures.
Okay.
Excessively relaxed measures. To the extent where from 2001 to 2006, our currency did not even devalue. We were ranged between the $60 and $70. The PKR was ranged between $60 and $70 for a very, very long period of time.
Why didn't it devalue?
There are a number of reasons for that. One is that our foreign direct investments was at record high. We had generated around $7 billion in 1 year in foreign direct investments because of privatization deals and because of private deals, such as the acquisition of Union Bank with Standard Chartered. A lot of people talk about mergers and acquisitions. The largest merger and acquisition we saw in our time was the Union Bank and Standard Chartered deal, where I remember the guy who was in charge of the deal, he came to CNBC in 2005 and he was so bullish on Pakistan at that time in 2005. And he was talking about cricket, basically. His gentleman named Richard Meddings. He's probably retired from Chartered now. But the conversations was about how bullish Pakistan is, primarily because you had entities such as PTCL privatizing, you had smaller government entities privatizing, and then you had private transactions also being structured in this place. You had Barclays coming into Pakistan. You had other foreign banks who were looking to Pakistan. ABN AMRO acquiring Prime Bank, another local entity. That was one example. So you had M&A transactions, significant regional M&A transactions happening. A lot of that had to do with the IMF nod, but the IMF nod took a back turn, and then finally, the market ecosystem was playing its role to finance dollar deficits.
So you're saying the IMF jump-started the economic activity in the mid-2000s?
Sure. So
why can't it do the same now?
They're highly relaxation
terms
measures.
were significantly relaxed.
The terms were significantly
which they aren't now.
I'm coming to that point because we're still very much in a post 9/11 world where there is a significant presence of the United States in Afghanistan, and there is a war on terror going on.
Right.
Let's fast forward from military dictatorship, we move into democracy. Okay. This is now 2007.
Right.
This is now 2007. In 2007, we all of a sudden have depleted foreign reserves again.
But how is that possible when you were just pumping in so much?
There was a massive erosion. A lot of that had to do with the 2006 financial crisis. When you were in New York, that happened. The markets tanked. There was a trickle-down effect of the 2006-2000 financial crisis. It hit Pakistan.
So 7-8 basically is when it hit.
It hit Pakistan.
7-8-9 in fact.
It hit Pakistan. The equity markets erode. The foreign portfolio investment, which was coming in earlier that we talked about, that sort of diminished. It got cut down.
Devaluation.
Then there was a transitory where George W. Bush eventually left office. It happened around, these 2 years were critical to Pakistan, where we had a change in the local administration. There was a change in the US administration.
So that was 8. That was 2008.
So
Obama.
these 2 years, change in American administration, change in Pakistan administration from military dictatorship to democracy, global financial crunch. And you could see your reserve levels diminish to an extent where all the work that was put in 2001 and 2006. Now, there were problems in 2001 and 2006. Right. That period that we had, did we utilize it for infrastructure growth?
Right.
Did we use that money in health? That dollar inflow that was coming in, did we use it in health? Did we use it in education? Did we develop our infrastructure? Did we develop our hospitals? Did we concentrate more on education? What happened was that most of it was in the commercial banking system. And when in the commercial banking system, these M&As happened, which I was talking about earlier, a lot of that went into credit. When I was 25 at CNBC, someone handed me a credit card at the age of 22 with a limit which was 5 times my salary.
Wow.
At the age of 22. At the age of 22, I could go and buy a house.
So a bank...
Just because I had a job at a multinational.
Wait, so you're saying that a bank handed a CNBC anchor a credit card with a high limit?
With a high limit.
I see that as a different kind of activity.
Okay, at the age, and I was
buying
barely...
some favorable responses.
I must have been 22. Is a bit young. I'm exaggerating, but I must have been 24, hitting 25.
Right.
With 2 years of experience.
Right.
And an ABN AMRO card at 5 times. Motorcycles by the galore, brand new cars by the galore, all on credit. And this country at that time did not have a credit bureau.
Okay.
They did
not.
So
how are they assessing candidates?
By your salary. By your salary, how much you're earning today, whether you'll earn that much tomorrow, whether this boom continues or not, was not. So you had banking spreads at 7.5%.
So you see this period, what you're saying is from 01 to about, let's say, 07.
07.
Right? You see this period of boom, relaxed lending, a lot of investment, free
Faizan,
credit,
it's very similar.
Free money,
it's
basically.
very similar to the bubbles which were created in the United States post 2007 while you were there. Excessive lending without any significant collateral. Products which are coming in by the dozen.
Right.
Banks competing with each other for consumer spreads and developing a market share. Also, you have to remember, because of the dollars flowing in, there was very little government borrowing. Yes, there was. I remember I was on a show where Nadeem Hussain is still on YouTube, and we were saying that, government ki borrowing 360 billion ho gayi hai, which is, comparing it to now, is peanuts. Right? So, but the government had an appetite. But now what is happening is that the government's appetite to borrow is so huge that lending is just thrown out of the window. Even if banks wanted to lend, they might not have the resources to lend because the government appetite is so big. It's called the crowding out effect in macroeconomic terminology. So Coming back, we're just going in circles. Coming back, so when this Musharraf thing ended, we had to go back to the IMF again.
And this is during the global recession.
Yes. And this is
the Great Recession, as they call it.
And this is People's Party's government. At that time, I've never seen, the lowest I've seen our reserves are actually at that time when our reserves were 2.5 billion. Okay. Today, the country's reserves are standing between 3 and 3.5 billion, or a little over 3.6 billion. But at that time, our reserves were 2.5 billion, but also our appetite, like 2005, 17 years ago, was a lot less than our appetite today.
So the runway was a lot longer. Right.
So we went back to the IMF. The conditions again were relaxed compared to the conditions today. Why?
Why?
The Americans needed us again. The Americans were not out of Afghanistan. There was still a physical presence of NATO in Afghanistan. The Afghan transit border, which is a transit trade route, which is being used today, was still very much a huge requirement for NATO and American coalition partners and America itself. Mm-hmm. And more importantly, at that time, we had something called the Coalition Support Fund, which was something which was developed under the Kerry-Lugar Bill. So the Kerry-Lugar Bill, basically, in a nutshell, is an extensive bill. But what it said was that countries such as Pakistan, which are supposed to be, coalition partners in the Wall of Terror, their budgets and expenditures on this war should be financed to an extent where receipts should be reimbursed. जिसको कहते हैं हमारे लफ्ज़ पे. That was a $350 million a year program.
So basically, our expenses were reimbursed.
Yeah, the Coalition Support Fund. It was fixed, but it was $350 million a year, which came under CSF. So again, the IMF said, listen, they have a CSF of $350 million a year. They have support directly coming from the United States. Why do we have to have such stringent conditions for structural reform? Why do we need to put, at that time, circular debts head, which you probably read about in the papers, which is the payments getting stuck from oil marketing companies to IPPs and then finally to refineries. This circle, we can discuss that later as time goes on. But that's why the conditions were relaxed. And to get a little bit controversial, to get a little bit controversial, there were also drone strikes taking place in that country.
So hold on a second. So let's come back to this. You're saying the conditions were relaxed because we had an expense account for the war.
I'm saying that was one of the reasons.
Why would your conditions be relaxed if you have an expense account?
I'll give you one of the reasons. Your $350 million was directly hitting the balance of payments, your external account, right? So when you talk about the balance of payments, your credits are remittances and exports. Your debits are imports and other external payments and remittances, outward remittances that you have to adjust.
So anything going out against what's coming in?
What's coming in.
And what's coming in, you're getting a fixed $350 million every year.
Million a year. So they knew that at some stage or the other, the current account surplus, even if it goes to $1.32 billion, that $350 million is enough to facilitate it, right? And then there were other critical issues why they needed Pakistan to be financially stable.
And so you're saying that the IMF saw the $350 million a year.
That's one of the reasons.
As a sort of a backstop for any financing they give.
That's correct.
That's one reason.
That's correct. The second reason is that the conditions might have been a bit more lenient at times because we did do some structural reforms during that time, which are still here today, such as the Fiscal Debt Limitations Act.
This is during the People's Party's
This is during the People's Party.
So the People's Party's government had structural reform.
To an extent, where consumption was brought to, was arrested to a bit, interest rates were jacked up, the currency was finally let go, a currency which was
pegged, it jumped from 60 to I think 82, 83 or something.
The currency which was pegged for 6 years, it was finally let go.
Right.
So when the IMF looks at a country, the first thing which they look at is currency and interest rates. I know people on TV and talk shows, they talk about power sector reform and tax budgets and fiscal deficits.
Why do they
make it sound very complicated?
But if you simplify it, why do they look at currency and interest rates?
So I'll tell you. When you take a SDR deposit,
what is an SDR deposit?
A special depository reserve. So the IMF is not going to give you $1.1 billion. They're going to give you SDR currency. It is their form of currency. It's a basket of currencies, which they hand over. When you go and borrow something, right, and you're willing and you need to spend that into the local economy, wouldn't the lender want the value of what he's giving you to
be at the maximum
possible way? So if you're artificially controlling your own house and exposing yourself to a lender and saying, no, it's not like this.
Which is happening right now.
Which happened
in the mid 2010s.
Which happened in the mid 2000s. So today, what you did was that you exposed yourself and said, listen, I'm worth 223 rupees. I'm worth. And the lender saying, no, you're worth a lot
270.
less than that. Like if I give you something, you are going to spend that at 270. You're not going to spend that at 223.
So if the lender gives you $1,
right.
We had said that dollar's worth 223, 226 pegged.
Yes.
But the open market
was 270.
When I go to buy a dollar,
right,
was 270.
Right. So you have to look at it in a smaller context between a contract between a lender and a borrower. It's very simple. The second thing is they want market-driven stuff. Now, whether that's a free market, a regulated market, or any market. And I think the IMF is a bit more stringent in this regard, because when you talk about markets, the forex market is the most liquid market in the world. It's more liquid than the fixed income market. It is definitely more liquid than the equity markets. The euro dollar is the most liquid market in the world.
Which means that I can move currency in and out of other currencies as easily as I want.
Euro dollar is the most liquid in the world. After that is the Japanese yen. And then after that is the GBP, and then the Aussie and the New Zealand dollar. These are direct currencies. So the IMF expects, and our currency can be very easily manipulated. It's very easily manipulated and it's colluded. You can throw it in a corner, like what you've seen in the last year and a half. This currency has basically been thrown in a corner by a number of different institutions who are not actually colluding, who are operating in silos, but the trend is, the trajectory is the same. So I think a lot of policymakers who believe in pegging and who believe in fixing the rates at a certain extent, it does have a calculated thought behind it.
But it works against IMF requirements.
But what it does is it controls imported inflation. All right.
And it controls the debt exposure that you have on a rupee basis.
It controls foreign debt exposure.
Correct.
So foreign debt exposure. So when you have to repay a certain debt, which you did in January, our friends China, I got nothing. But the fact of the matter is, higher than the Himalayas and deeper than the Indus rivers. That's all well and good. But the fact is, they asked for their money back in January.
Yeah.
They did. And we paid them back. And I think Ishaq Dar, from what I know of the gentleman, he pegged that currency because there were two major payments. Again, we're drifting. We were in history, but we're now going back to that. In December, the Sukuk payment, and in January, the repayment back to the IMF. So back to China.
And pause right there. So you're saying, I'll come back to it. You're saying to be considered favorably by any foreign lender, your currency needs to be free float market
driven. Free float is something very different.
Okay, sorry.
It has to be driven by market forces.
It has to be driven by market forces so that the maximum value can be extracted.
Yeah.
And you said your interest rates need to be
pegged with inflation,
which was not the case back then.
So now we're getting a bit technical. I'll tell you. So the IMF, in its conditions, in a normal situation, when you are lender of the last resort, when you're going to the lender of the last resort, and you're not involved in the war, your real interest rates must be positive. Is the highlighted question.
And the real interest rate can only be positive when it is higher.
Your benchmark real interest rate has to be at least a nod positive VE over CPI.
Got it.
So your CPI today, the data last week was 27%. Your theoretically, on paper, without negotiation, sign the dotted line, your interest rates, your real positive interest rates should be 28%.
28%.
28% is a real positive interest rate. Mota hisab jisko hum
because net ye hai ke cost of your basket of goods is increasing by 27%. The money I put in a bank is increasing by 28%. I have a 1% positive on top, right?
Right. That's what it is. So
that means we need to have a market-driven currency, which puts it at about, let's say, 275.
Right.
And we need to have an interest rate of about 28% today to be considered favorably by the IMF.
That's a Puritan speaking. Without me, as someone who reads the document, right? But there are negotiations going on.
Now, and that's the Puritan, and then you add in sort of the geographic, the geopolitical.
Then me sitting representing Pakistan would be like, but monetary policy does not play a huge role in inflation in Pakistan because all our problems are fiscal. And then they say, okay, fine, let's not keep it positive VE, but it has to be in an upward trajectory as long as inflation is increasing.
So what you're basically saying is that the current finance setup did a good thing. Contrary to what is being discussed.
What I'm saying is,
by saving us money when they were paying back debts.
What I'm saying is that it was a calculated decision. It wasn't that, there are articles in the newspaper I was reading.
But how can you calculate if it was a good decision or not?
Well, the currency devalued by 30%, right? So if the currency devalued by 30%, there were two foreign debt repayments which are made at a fixed peg. What I'm saying is this, okay? That it was a calculated decision.
And they paid that debt back at the
fixed peg. And the moment the China debt was repaid, the peg was removed.
And so how much money did they save?
Those are calculations which I don't have in front of me right now. What I can tell you is, what was the cost of this? Your remittances, which were at all-time highs of 30 billion, dropped significantly year on year to 26, 27 billion. Your exports reduced.
But you can't compare a one-time debt payment to an annual remittance, which was hit for a 2-month period, right?
We can talk about this for a very, very long time. The conclusion of what I'm trying to say is this, that whatever you're hearing on the media, that the decision cost Pakistan, and this is the worst finance minister of all time, and this peg was uncalled for, Pakistan ka bahut nuksan hua hai. What you're not hearing is that the peg, and I'm going to put the advantages. One, you had two critical debt repayments. Two, your imported inflation, to however short it was. I'm a true believer that some relief is better than no relief.
Right.
All right. Some relief, it could head to a disaster, but those 2 months where oil prices were under control, there was relief. It was artificial, but there was relief nonetheless.
Right.
And third, the most important thing is that the dollarization phenomena, it may have increased because of the Hawala market, but what it resulted in was that people were unsure whether to continue buying the dollar or not, because you were not getting it available. They had shut the dollar.
Which has not changed today.
It won't change. But what will happen is that now things will improve slightly, because now that the currency has adjusted itself, exporters who are holding on to their exports are bringing their exports back. The remitter who was going to the Hawala market, now that he's getting a better rate and a competitive rate from the interbank banking channels, will come back in. So liquidity will improve. But that peg was removed right after the China debt repayment. So our repayment structure is a bit opaque, and so it should be. Once, if the entire market knows what exact date a repayment is due for the rest of 2023 to 2026 to our foreign debt payments are concerned, things will get very complicated. So
wouldn't they get better because it's completely transparent and you can plan out cash flows and sort of receivables and remittances accordingly?
So the China repayments are not. Sukuk maturities are public information, because you know when you buy a paper, you know when it's maturing. Similarly, Eurobond maturities are public information. There is certain debt which the country has taken on from foreign lenders, other countries, which is slightly opaque. That includes certain deferred payments which have taken place from the United UAE and Saudi as well.
Right.
Just what I'm trying to say is that whether the decision was right or wrong, we can debate this all evening. What I'm trying to say, what they're not telling you, that it was a calculated decision. I am saying it could be a wrong decision. There is a wrong decision, because when you reconcile the numbers,
what you're trying to justify is that there was a calculation rather than this being a random, arbitrary.
This was not an ego decision that, gee, मैं आ गया हूँ तो मैंने सारा कुछ control में कर देना है. This is not what it was.
You sound like a PMLN supporter.
I am not. I will say some certain good things about the Pakistan Tariq Insaf as well. Okay.
Right. So you actually said PPP had good structural reform. You're saying PMLN took a calculated decision.
I thought the ex-governor under the PTI who they brought in was excellent. There was
State Bank Governor.
The State Bank Governor, Mr. Azabakar, Dr. Azabakar. I thought the Roshan digital account was genius.
Right.
I thought he played a critical role in increasing remittances in this country.
Right.
I thought he played a critical role in bringing in remitters into the banking channels who never increased banking channels before. The fixed income markets.
This you're talking about the amnesty scheme.
No. I'm talking about developing a product called the Roshan digital account.
Of course, but even the amnesty scheme brought money back into the system, right?
But that was a government decision. I'm talking about a central bank product development decision.
Got it. Because that government decision is causing a lot of people some heartburn right now.
That's a separate silo altogether.
Okay.
What I'm talking about,
but the public doesn't know that.
Let's explain it in simple terms, primitive terms. The State Bank of Pakistan has the ability and the capacity to develop products which can attract foreign portfolio investment in the country.
Okay.
Because the Treasury bill is a state bank instrument. Similarly, a Pakistan investment bond is a state bank.
Got it.
One of the objectives of the state bank is that these government instruments that are issued, इसमें फॉरेन पोर्टफोलियो इन्वेस्टमेंट आनी चाहिए.
बिल्कुल ठीक है.
पाकिस्तान को खोलना है. अब पाकिस्तान को कैसे खोलना है कि लोकल डेट में ग्लोबल फंड्स, ग्लोबल जो फ्रंटियर मार्केट फंड्स होते हैं, उनमें एक्सपोजर लेके आना है. right?
ठीक है.
So when they do this, they invented something called the Russian digital account, which is a one-window solution, which means that you can something like the special convertible rupee account, which we have in equities and fixed income as well. But an overseas Pakistani can bring back in money. He can invest in government securities and other products
And get a decent return.
Get an excellent return.
7%.
Yeah.
Whereas the rest of America on fixed income is giving you 2-3% max.
Now, if Powell decides to increase federal fund rates, which he just did yesterday, then you're competing with the US 10-year paper, and there is no other product in the world which can compete with the US 10-year
Yeah,
paper.
but the
Because
problem...
they're safe haven.
But
Now
the problem is that even if someone from an overseas Pakistani sends back $100 and they send it back a year ago, they send it back 180 rupees.
Yes.
Pakistan, when they have to pay back this overseas Pakistani today, is paying back at 280 rupees. So even though you got the debt reasonably
that's correct,
cheap,
but there are dollar-denominated instruments in this. In the Nia Pakistan certificate, which is part of the RDA process, the Nia Pakistan certificate was dollar denominated. And the reason I'm bringing these products up is because I don't want to sound like a PMLN supporter. There have been certain structural product development, pure financial product development.
This all happened under the PTI government.
Innovation, which we have seen in the PTI government, and it showed in the remittances numbers. It showed in the increase in exports, and it showed in the foreign currency which flew into Pakistan.
So you're basically saying all three parties did something good, contrary to what others believe.
All of them have done good things. All of them have done terrible things. No one has done excellent things. Okay, they've either didn't.
But when I deduct terrible from good, I end up with a net negative situation.
That is the reason why we're in today. Now I'm going back to the original conversation that we're having, IMF and Pakistan.
Right.
Okay. The Pakistan People's Party negotiated a program, and this is a fresh program, in 2011. 2011. This is a fresh program, and this is theoretically the same program that we are in today.
Right.
Okay. It was a 6.68 billion program, relaxed. One, because of the coalition support fund that we were receiving. Two, because I don't want to get political, but the drone strikes, there was the Americans, there was an open airspace for the Americans to operate in, where our airspace was being used. Let's just leave it at that, right?
So you're saying,
again, a situation.
So it's a rental fee for an airspace.
If you want to be completely blunt about it, that's exactly what it was. Post 9/11 situation.
Right.
Coalition partners, coalition support fund, airspace, relaxed IMF conditions.
And that all changed the minute they pulled out of Afghanistan.
I'm getting there. Okay. Fast forward 2016. PPP is out, PMLN is in.
And Trump is in.
And 2016, Donald Trump gave the indication that the Americans are leaving Afghanistan. The indication was given. They didn't leave. They actually left when Biden came. But the indications were given that America has got no more role in Afghanistan any longer, and start counting the days. Where to the extent where the Qatar negotiations started, and this exit between the negotiations between the Afghan government, the opposition at that time, which was the Taliban, and the Trump administration, it had begun. So the writing was on the wall in 2016 that the Americans already.
Right.
Despite all that, the PMLN, with stringent conditions, with a lot more stronger conditions this time, decided to enter into a extended fund facility.
With the IMF. Basically asking for more money.
Asking for more money.
Could they have asked for money from someone else?
Right.
Could they have? Could they have gone somewhere else for this money?
Look, now you brought this question up. When you go, this is today, when you go to Saudi, Qatar, UAE, Bahrain, they have now said that when you go to the IMF, you get a list of structural reforms which you need to take place, which means arrest your fiscal deficit, control your import bill, keep your FX market driven, control your power debt, control your circular debt, make sure that your tax collection targets are met. Your tax collection targets have to be aggressive. This is it's like going to university and saying, we'll give you a scholarship, but you better make sure that you get full marks or
you get a 4.0 GPA, you wake up at 6 a.m. and go to class, you go to bed at 10 p.m., you eat only broccoli.
This is exactly what it is. The IMF can also be used as a university. I think Bangladesh have actually started using IMF as a university.
No, but if they're giving you these kind of stringent, if it's like going on a keto, like a diet plan, exactly I mean, the goal is to come out with 6-pack at the end of it, right?
That's exactly what it is.
So then why are we so scared of coming out with a 6-pack and looking buff?
I'll tell you why. Now, it's been lenient, okay? It's been lenient for a long time. 2016 was the most stringent...
IMF.
Not the most stringent, but from 2001.
From all the years, yeah.
Yes, because the indication was given that we're leaving. You still had the Coalition Support Fund program, but finally they started talking about, listen, your circular debt since 2001 is totally out of control.
Right.
Your tax collection is not meeting. We never met. Since then, we had not, since 2011, we didn't meet a tax, FBR didn't meet a tax collection.
Right.
Your structural reforms of increasing the tax bracket, of increasing your tax base is non-existent. Your import bill is increasing by the dozen.
Right.
By the dozen. And more importantly, your twin deficits, which is your fiscal deficit and your current account deficits, these are inflated. They negotiated the program. They did the reforms. We got the money again.
How much did we get?
We got at that time around 1.11. It's the same $6.68 billion that we're talking about.
Got it.
Now, all of a sudden, you see the PML government going after securing the money, getting money from the Saudis, opening CPEC, having debt coming in, project-specific debt coming in. Debt is fine as long as it's project-specific coming in. Signing a LNG deal with Qatar, resolving the gas issues, and creating a pure growth model for Pakistan. And that was another time in Pakistan where you had interest rates in an IMF program dropped to around 6.5%.
That's right. This was 2016, 17.
The interest rates dropped to 6.5%. Inflation was under control, and Pakistan was growing at 6.5%.
This
is all happening with this finance minister, the same finance minister who we have now.
This was 16 through 18, in fact.
That's correct. And a lot of that had to do with the infrastructure development which was happening in CPEC. A lot of that had to do with the large-scale manufacturing which was taking place.
And wasn't the dollar also fixed around 100?
Was not fixed.
100.
The dollar was not.
Was managed.
It was managed. And
it was managed.
The reason why it was managed was because he propped up our reserves to 18, 19 billion. Then what happens? What happens is that when you create an environment like this, a pure consumption environment, your current account deficit swells up because you're importing machinery, you're importing luxury goods, you start importing. And at that time also in external conditions where oil prices dropped to between less than $40 a barrel. So your current account surplus, your current account was under control. But the moment the commodity prices started increasing in 2018, you saw your current account deficit go over $15 to $16 billion in a span of 2 years. And then again, the problem started happening. Let's fast forward more. In comes Prime Minister Imran Khan and his brand new team, who don't have any experience in dealing with the finance ministry. And his first finance minister has never negotiated with the IMF before. He decides, should we go to the IMF or should we not go to the IMF? Because the conditions are getting tougher. The fund isn't who it was in 2001, right? And they say, you know what, same situation today. They said, we don't have a choice. Lender of last resort. If we do not go to them, we are going to default again. This time, the conditions are the toughest I have seen them. I consider myself a post 9/11 person who has been through, as a professional, who's seen all of this stuff, who's studied the conditions as an economist, as a journalist, and then doing treasury and directly being involved in the FX markets. When you work for a large bank, a top 4 bank in Pakistan, all of this FX stuff, you're directly doing the hedging. You're making sure that your position is reconciled and sent to the central bank. And when there's a dollar shortage, you are responsible for settling an oil LC to ensure that LC does not default.
And
so when you see, in 2000, so what I'm saying
is 18 comes in.
In comes 18. Stringent. And during that negotiation, Mr. Khan flies to Mr. Trump, goes sees him. Before that, the Coalition Support Fund program is closed.
And so he goes to the US. The Coalition Support Fund has come to an end. IMF has given strict conditions to a team that has never dealt with the IMF before.
That's correct.
This sounds like disaster waiting to happen.
It was, and you saw excessive devaluations take place at that time as well when the PTI government came in. You saw the dollar from 122 go to around 137, and it continued devaluing.
Right.
But I didn't, a third party should not mind those devaluations because Mr. Raza Bakar, who we were discussing earlier, had a very simple philosophy when you actually study the markets. When your current account was in a surplus, your currency would appreciate or remain stable. The moment your current account deficit started inflating, your deficit started inflating, your currency used to start devaluing.
Got it.
So he would make sure, through Roshan digital accounts and building up the reserves, and again, Saudis gave us money, and again, we got
So
a whole
he's
bunch of
technically
money.
managing.
So he used to protect his reserves.
Yeah.
He used to say that I have worked very, very hard to build up these reserves. I have negotiated with the IMF. I have begged lenders. I have gone to multilateral agencies. I've gone to G7. I've launched Eurobonds. I've launched Sukuks. These reserves are Pakistan's responsibility. And if the country is growing, which it was at around 5 to 6%, because of your import consumption, if the current account deficit swells, we will devalue the currency to control that consumption, to control imported consumption. And if your current account is in a surplus, which it was during COVID, coming back to COVID, I would consider it as a blessing in disguise for the PTI. Yes, they decided to keep the economy open, but when oil crashed, automatically your current account was in a surplus. And you had exports coming in, and you had exporters taking full advantage of that situation because their factories were open and booking orders and competing.
Because there was China as a market was not open to the rest of the world. So they were diverting a lot of the orders to different markets, including Pakistan. And Bangladesh was closed as well.
Bangladesh was closed and Vietnam was closed. So those two countries being closed, a lot of exporters, and kudos to them, jumped on the bandwagon. They took advantage of the situation, and that is when our export orders were booked. And that is how these factories grew up, and PTI deserves credit for that.
And they even gave out the turf facility, low and cheap financing.
To the turf facility, that's not something I was a fan of. What I was a fan of, at that time, nobody knew how deadly that virus would be in Pakistan.
Right.
So if you ask me personally, I thought it was a gamble to keep Pakistan open at that time. It was a gamble. It was a risk that paid off. But I remember that speech from the Prime Minister. At that time, he got a lot of back talk for that speech because nobody knew how deadly that virus was, especially in Pakistan.
And even within Pakistan, there was fractions because Sindh wanted a more closed-off approach.
Right.
The federal government wanted a more open approach.
Right.
The NCOC sort of played somewhere in between. And I think the NCOC is an example, and I'm bringing that up. I think that's an example. There was articles written on this. The NCOC was an example of, in the recent memory, the first time all factions of the governing bodies of this country coming together for the greater good.
Yes, absolutely.
And that is, again, a credit to that government as well.
And at that time, I was actually supporting the provincial government. I was wrong for closing the country because we were all scared. We didn't know how deadly the virus was. So you could understand the...
But that's a gamble, so it could go either ways.
That's what I thought.
So now coming back to the IMF. So the difficult period...
Now we are negotiating where the Americans are out of it.
So wait, I'm going to do a recap because this has taken a while to get to. Relaxed environment for the IMF in the early 2000s.
Right.
You then started seeing a more structured environment for the IMF. And then finally reaching this point now where it is the most restrictive environment for the IMF. And you can look at this in parallel to America's involvement in Afghanistan.
You've hit the nail on the head.
And so the more stringent it gets, the less America is involved in Afghanistan.
That's correct.
So the question now is,
just one last thought. So when I talk to young people who've just graduated, this is the way I explain it. My hair's gone white, but I'm not that old.
At least you still have it.
Yeah. So this is the way I explain it. I was like, beta, like the old man, beta, hum 9/11 ki paidaish hai. And it's somewhat true that, that all we did in Pakistan and these boom bust cycles are post 9/11. I was like, this is the first time, I think, that Pakistan now as a country, as an entity in my generation, is now going to have to stand on its own 2 feet. Because of the successful or unsuccessful exit of Afghanistan and the end of this war on terror in this region.
So you don't think America needs Pakistan anymore?
That's not the point. The point is that...
Because clearly when they needed us, we got free money.
They still need us because of the geography of the
So then we should get some money.
They still need us, but they do not need a credit supply line. They don't need bases in Pakistan. They are out of Afghanistan. Now, do they have a stake in Afghanistan? What sort of position do they have on Afghanistan? What is their foreign policy in Afghanistan? Right? These are all things where America's exit from Afghanistan, which means that there's not a single American soldier left in Afghanistan anymore, really, when I say that we are finally in a post 9/11 scenario, this is what I mean. And when I mean that this country now has finally is in a post 9/11 scenario, I mean that these directives, these requirements of the IMF are now the same requirements any other country such as Nigeria, Ghana, possibly even Argentina will get without that excessive support coming from the US Treasury.
So you're saying, when we were talking earlier about that paper calculation for an IMF loan, which is the real interest rate, and having a currency that is determined by market forces.
Yes.
No longer any of this other sort of geopolitical influence.
Yes, that's correct. So I just on this positive VE real interest rate thing, I don't want to upset market industry players and market people on the show. I'm talking as a Puritan, which means this is what is written on the IMF mandate, that these are the requirements. Eventually, these things are negotiated where, yes, there are certain interventions which can take place. You don't want your currency being controlled by speculators.
Got it.
Neither does monetary policy in America. The monetary policy is the number one tool to control inflation. It's not like that in Pakistan. In Pakistan, fiscal policy is the number one. So these things are negotiated.
Got it.
But yes, if you read the book,
got it. So now what you're saying is post 9/11 is after the war on terror is done, after everyone's moved out. The IMF is finally looking at Pakistan just as a financial model without the political influence.
That's correct.
And when you look at it as a model just on paper, the model doesn't make sense. It's upside down.
That's correct.
And so now when we go and try to renegotiate or ask for money, where do we
negotiating as we speak?
Exactly. And so where do we go from here?
So we've also knocked on a whole bunch of doors before reaching this point, right? And people know that. And that's the reason why the IMF is.
And those doors were closed.
Those doors said, please go to the IMF and then come back to us, because we want you to go to university,
right?
Get that scholarship so that we know that you're accountable.
Yeah,
we are not professionals and specialists.
We're not professional lenders. Go to the professional lender.
Get a clean.
If they lend to you, we'll lend to you.
Get a clean check from them, which means that you're doing some sort of structural reforms.
Yeah,
and after that, come back to us.
But
so just to finish my train of thought over here, the IMF is there are a lot of countries right now which are saying that the IMF structures are too stringent for developing countries, where austerity and just the fact to secure that this country pays you back does cause a lot of suffering to the people. So there's that school of thought as well, and it's a very I don't want to get into confessions of the economic hitman, because I don't believe in all of these.
You don't think that's a plausible book?
I think there are a lot of extremist views out there. Right. What I do think is, if you look them as a pure lender of the last resort, they will do whatever it takes to make sure that the country reaches a level where they have the ability and the capacity to pay.
Look, at the end of the day, that's one thing. And we keep saying lender of last resort. At the end of the day, we have to be clear. If someone's giving you money when you look like you can never pay it back,
correct, yes.
They are going to put all sorts of controls in place to ensure that you at least pay most of it back. Let's not say all, but most of it. So then if you're going to take that money, you have to comply.
That's correct.
And so the question that now arises, and I think that's the question in everyone's mind, is, let's say we take this money.
Yeah.
Do we have the cojones to actually pull off the structural reforms that will be mandated?
Yeah.
Because if you think about it, if there are, let's say, 5 powers that run this great nation of ours, let's say we have one power base being the political government, one power base, let's say, being the judiciary, the establishment, as you want to call it, of the military establishment. You have big business, and then you've got the bureaucrats. Do any of them benefit from structural reform?
In the long term, Right now, nobody benefits.
Okay.
Not me, not you, not anybody sitting in this room.
On the 2, 3, 4, 5 years that they are on their post.
Nobody benefits.
Up until they're in retirement. So then why are they incentivized to pull off structural reform? Where is the incentive? Man is driven by incentive, right?
Fiscal. I'm always a firm believer that no government can do this on their own. The problem that we face now of being on the brink of
They
default,
lose their voter base.
on the brink of default, no government can do this.
So they lose their voter base.
They will lose their voter base. That is for sure. But having said that, there are certain things which the government can do with the help of the private sector, which can pull this country out of the mess it is.
Privatize.
That's exactly what I've written as the first step.
But you end up in NAB for a few years for buying anything that the government sells.
Yes. And I do not want to get into the political framework, but the fact of the matter is that the first thing,
so eliminate NAB should be the first thing.
The only time I've seen the privatization commission or the privatization minister do anything in this country is during the tenure which we were talking about last time. First, forget everything, forget NAB. First, at least put somebody जिसके हमारे ज़बान में कहते हैं नियत.
साफ हो.
नियत हो कि भाई मैंने एक प्राइवेटाइजेशन ट्रांजैक्शन वन.
How much do you think privatization can raise?
It's a very straightforward.
Top 10 assets.
At least $5 to $10 billion.
$10 billion.
At least $5 to $10 billion.
What would you do with that money?
It goes into it's the government's money.
So would you pay back debt? Would you apply it towards?
It goes into the reserves, right? Privatization money goes into the reserves. Similarly, just the way the PTCL money went into the reserves. If you want to have that merger and acquisitions environment in Pakistan, that M&A which you've been exposed to while you were in the West, you need the government to start getting into M&A transactions first. That is what's going to bring the mergers and acquisitions.
Who has the cojones to pull off this M&A?
Now, we talked about NAB, right? This is what I say. We have seen transactions in Pakistan before which are executed like this. There are other ways also. Okay.
So privatization is one.
This finance minister did a 4G auction. We have to do a 5G auction in this country. We have to. That is not a privatization transaction, but if you do a successful 5G auction,
it's about $2 billion.
$2 billion. This government will gain credibility.
So you're looking at about 12 billion right there.
You're looking at 12 billion. Right?
What else can we sell?
5 billion to take the top number of privatization would be unfair.
Okay, let's take 5 plus 2, 7.
7.
That's 7 right there.
7 right there. Then the second thing is once you have these 7, then you need to expose Pakistan to the global market. We've done it, but we've not done it to the levels where we should have done, which means that your Eurobond and Sukuks should be higher. The Islamic global markets right now are much more liquid than the conventional global markets. So
you're saying that you issue Pakistani paper to the global markets?
Yes. It's going to be a lot more difficult with the federal fund rate at 4.7%. Nobody can compete at these rates.
Right.
It's unbearable because being a frontier market, this might not be the best time to enter the bond market, but this could be a very, very good time to enter the Islamic window.
So you can't compete with the US market at 4.7.
You have to go Islamic. You have to go Islamic.
So let's say you go Islamic.
All of this can only happen if you get the credibility in privatization, which is theoretically mergers and acquisitions, and you get the credibility of what is the second point we did?
So we raised the credibility by privatization.
That's correct.
And then spectrum auction.
Yes, the
$2 billion you pick up from there.
Yes.
Both those transactions create credibility. So you're saying that you need a credibility play right now.
You need a credibility
before you can go out and ask for more money.
That's exactly what I...
But the question is the credibility play will take you 3 to 4 years.
No, it won't. It can be much shorter than that.
How can you set up due diligence of a government entity is going to take at least 2 years?
I consider a secondary offering the first step. Okay, a secondary offering is very easy. These OGDCL shares and these Flana shares and these PIA shares, they need to go to in secondary offerings first.
So you're saying create secondary offerings, find buyers for the secondary offerings through a block trade.
Start with that. Take small steps.
People take ownership in, change the board.
With the objective and an agenda for an MOU of privatization.
Sounds very doable.
This has all been done in this country before.
So why can't we do it right now?
Well, like you said, one controversial institution you've already mentioned.
I've mentioned 5.
The other, look, for me, I don't want to get into the controversy.
But look,
I'll get on that.
I won't get into that. You see, the reason I'm pushing on this is because, look, there's a lot of people, you keep mentioning the post 9/11 generation, and I want to raise a point here. There's a whole bunch of us in this country who are sitting at that midpoint in their lives where they're not too young anymore, but they're not too old anymore. You know, they've got maybe 15, 20, 25 years of play left in their lives in which they have real earning potential in, let's say, the next 10, 15, maybe 20 years.
That's correct, yes.
The young people, they have a choice. They can just get up, go they can try to go, they can find something and start afresh, and they've got that whole 40-year spread in front of them.
Yes.
The old people, it's unfortunate, they're here. It's
correct.
difficult to pick up and move at 65, 70. So you know what? They're just going to ride this out.
Yes, yes.
What happens to the people sitting in the middle? Because there's so many people on the fence. You're seeing brain drain at record levels, 800,000, 700,000 people leaving every single month.
Yes.
So the question is, do you bet, just like Imran Khan did on keeping the economy open, do you bet on Pakistan straightening itself out? Or do you say, you know what, this is the time to pack up and bounce? Because if this has not fixed itself in 75 years, it won't in my lifetime of earning, which is, let's say, another 20 years. So where am I placing that bet?
Look, it's one of the most difficult questions you can ask anyone, let alone me or anyone personally. What I will say is this, that the post 9/11, so the post 9/11, the situation now, we have not seen it before. Where me and you are just about the same age, and we've been working in this country for a while right now. This is a huge challenge. Talking about Euro bonds and privatization, this is all easy when, people are willing to listen to you, because this is a huge, massive challenge. Your personal thoughts aside, there are always these conflicting thoughts on whether it's time to pack up and go, or whether it is not.
2000s were not a time to pack up and go. 2000s were a time to return.
Or to return. And a lot of people
did return.
That is the reason why I started that conversation, was that the people who returned
were beneficiaries of that period.
Are beneficiaries of that period. And that probably includes you and me and a number of other people we know.
Right.
The reason why the conversation gets difficult is not because you mentioned earlier that young people can pack up their bags and leave, right? For us and people who are entrepreneurs in this country, I'm a semi-entrepreneur, but people like you are entrepreneurs in this country. It's not about the money. It is about the time and the effort.
That's true.
And the time and the effort.
The ROI on the time.
The ROI on the time, right? The amount of hard work and persistence which has been taken to reach at a certain level, and because of certain external forces, you have reached a level where you cannot let go, and you believe in one because you know what
you can always let go.
Yeah, you can. But one, because this stuff which you've written on paper, if it is done, this country sort of, again, moves forward.
It accelerates.
Accelerates, right? Or two, the reason why that question is in your mind is because of the amount of time and effort which has been put into this country. And this is not just entrepreneurs such as yourself. These are people who have developed who have gotten rich in this country. This country has made a lot of people a lot of money also.
I still think there's even today, amidst all of this, I think you can make more money sitting in this country than you can make in any other country. Hands down.
That's a given. Listen, the question...
you just need to know how to play ball.
The existential question is very simple, right? If you believe in this country, everything is dirt cheap right now. Because everything, it can get cheaper. But
that's a big question. You're saying, wow. You can't just say that, drop the mic and walk out. If you believe in this country, everything is cheap.
What I'm trying to
Why is everyone moving their money out then?
Is DG Khan cement is trading at 43 rupees.
Right.
Okay. Yes, it is. The
whole market is trading at a discount to the region.
I think last time I checked, I don't follow equities anymore, although I should have, because I haven't bothered. The market capitalization is now 26 billion. When I left CNBC, it was $60 billion. So I think it's trading at a price earning multiple of less than 3 right now. Okay. There are stocks which are trading at the same levels they were trading at 2007. What I'm trying to say is simply this.
If you believe in this country...
I have never seen the stock market cheaper.
Go back a step. Yeah. I think that it nails it. I think what you said is, if you believe in this country...
You would be buying right now.
You'd be buying right now.
You would be buying right now. Yes, that's true.
Now, how do you define belief? And who are you believing in?
Right.
Because that is the real question.
Look, these solutions that we have just jotted down, these 3, the 5G auction, privatization.
Very logical.
I haven't made this up. I'm not a genius. I've seen this stuff happen before, right? I've seen this medium-term roadmap take place in this country before. But it has taken place when the external environment is very different, which we've discussed earlier, which is the 9/11 scenario. If you think that all these things are a reality, which they are. These are not dreams. These are realities which can take place. If your institutional reforms, if your institutions are based with the right competent people who have this specific agenda in mind, this can easily turn around. Now, for all this to happen, if you look at it at a medium-term, long-term vision, the IMF is critical for all this to happen. This is the reason why we're in talks. We're not in talks. People say, oh, it's only $1.1 billion. So what if it comes?
So then shouldn't the question be, do you believe in the people negotiating with the IMF? Because can they pull off the best deal to make this all happen?
Look, Ishaq Dar has completed an IMF program before. All right.
So he knows what he's doing. This is not his first rodeo.
I didn't say he knew what he was doing. I think he believes he knows what he's doing. That believing in knowing what he's doing.
Do you think he believes in Pakistan?
I think that.
Do you think he believes that he's got nowhere else?
I think it's
better to be.
I think when you do a close to impossible job, one, you do it is because you believe in the job. The second, you do it is people are saying I cannot do it.
To prove them wrong.
Yes. A lot of success comes with the fact.
Just you're driven by that anger and fire and rage.
Right. It's also, and that's fine. That's fine.
That's fine. Just get the job done. I don't care why or what your motivation is.
Yeah. You want to think that you're a king of the king of the world because you got it in. We don't care.
Just solve my problem.
And a lot of people are driven that way.
Yeah.
So I think it's a mix of everything. And I think that we have a.
Where are you placing your bet?
So just to get, so we have a Fiscal and Debt Limitation Responsibility Act in this country. Okay, nobody follows it. It says that 63% of your debt, your country cannot, your local and foreign debt cannot be over 63% of GDP. Right now, it's over 70%. Nobody follows it, but it's a Fiscal and Debt Limitation Act.
What does it do? What's the trigger? And
now,
what is the...
people are saying Charter of Economy banane. Yes. Whichever government comes in, उन्होंने privatization करनी
Who's going to run that charter? Who's going to enforce that charter? Who's the person enforcing? What's the position enforcing the charter?
That's the thing, right? If three big, a lot of people I talk to say the solution is Charter of Economy and have these three big signs just the way they signed, they signed for the military on terrorism, etc. And I'm like, yeah, we already have structural documentation like this before. Nobody follows it. Nobody does anything about it. You need to get into longer term contracts, such as the LNG Qatar contract. When you do a privatization contract with any entity anywhere in the world, or you do a 5G auction with any entity anywhere in the world, and you issue a government paper, it has to be on longer term contracts.
You'll pay less money in the long term than you would on spot and shorter term contracts.
We are a very short term thinking
because we don't the reason is because governments don't complete their terms.
Yes. Also, the governments do not want another government to come in and reap the benefits of their hard work.
So I think it is time that the mindset needs to shift because all five that I mentioned earlier will benefit.
Tell me something. Why do people say that is multi gas ka bada masla hai? Why?
Because there was mismanagement of gas for the last 40 years. There was unaccounted for gas. You're putting up CNG stations in the mid 2000s. You're giving gas to consumers.
COVID mein,
like
I know this, that no matter how well the PTI government did in COVID, but because commodity prices were at generational lows, there were companies which came to the government and said, please sign a 5-year contractual agreement with us.
And you would have locked the gas rates?
At 4% premiums, 5% premiums, 2.5% premiums. I'm not going to name the companies.
Premiums to those rock bottom prices.
To those rock bottom prices, please sign a 5-year contract agreement. And they said, no, we're fine because nobody wanted to take the risk to hedge. Bankers who are watching this will understand the concept of hedging. Whenever you hedge, whether that's at a higher rate or lower rate, when you hedge, it comes with a premium. That's just the rule of the game. It doesn't matter which direction the market is going.
Yeah, but everyone's also scared of NAB, right?
Yeah, but it doesn't. Exactly. Coming back to NAB. It doesn't matter which direction the market is going. If you are going to hedge and your premiums are in the positive, in the open market, which they were, they're going to charge today. If somebody in this country had signed a 5-year contractual agreement at those rates, me and you would not be having this conversation specific to this specific commodity. These are the decisions. It is decision, and the same goes with privatization.
You're asking people to take too many tough decisions that have no incentive in the near term from the outcomes of those decisions.
Right.
So the question really is, which you've answered actually, is do you believe in Pakistan? And I think we've spent enough time discussing this, and this is what I want to leave you guys with, is do you believe in Pakistan? Because this could go either way based on what you're saying.
On this forum, yes, I do. Yes, I do believe in Pakistan. I believe that the will of the people eventually, if we have more forums like this, if people start speaking the truth more about and try to understand existentially who we are and what we've become and why we have become
the way we are,
why we have become the way we are, which we've discussed technically. But if you look inside why we become the way we are and what we need to do to fix it, I think there is a lot of hope.
So we need a financial therapist.
We need a financial therapist
to talk to this country.
We need a therapist who understands existentialism.
Yeah.
Because I think we've lost identity. And with that, then once those issues are resolved, we need a financial therapist. And
I love it. The simplest solution to the challenges we face.
There are other stuff which need immediate attention as well, because we've been discussing finance, which is you need to restructure your foreign debt, which for some reason this government refuses to do. They're saying like, we'll do everything, but we're not going to restructure our foreign debt, which means that this payment which we made to China recently should have been restructured.
Right.
And to restructure that, they should be hiring a third-party advisory financial institution which restructures their debt.
Again, it's about, at the end of the day, as long as interests, it's a matter of interests.
Yeah.
Alignment of interests is what yields outcomes. Look, we've both worked in the corporate sector.
Right.
We got objectives at the start of the year with KPIs, and then we got incentives and bonuses upon achieving the KPIs.
Yes.
The question then is, what are the incentives and bonuses given to the people who will be taking tough decisions?
That's correct.
And that is, I think, the question that we need to answer. Niran, thank you so much for the time. Loved the session, loved the chat. We got technical. I hope we were able to summarize it for the folks who watched it till the end.
Yeah.
And look forward to having you back here again.
Thank you so much. It was a pleasure being here. I really, really had a good time.
Let's do this again.
Wish we had more positive things to talk about. But
we will. We're both believers in this place. We've stuck a pole in the ground and said, we're here.
We're stubborn also.
We're also very stubborn. Thank you for tuning in to DigiTales this week. Stay tuned for the next episode. Subscribe below to our channel and stay tuned for more. Bye.